So today's Thursday, and the first thing I'd like to say is thank you to everybody for all your suggestions on what I can do with my accounts on TikTok. I'm working through what I consider my strategy, which is working with TikTok and also doing things here today. So I want to remind everybody that my account is all things financial zero. That's it. All things financial zero. Anything else, they do ALI things, AIL things, two S's, 25, 2, 8. They're all over the place. I showed you yesterday. I'm all things financial zero. So, and thank you. I forget the name. It might be Ansley for giving me the suggestions that I don't allow people to download my videos when I record them. And so this one, I'm going to try to do that. So thank you for that. Now, we've been kind of in a holding pattern, I think, for the last, whatever you want to say, 4 to 6 weeks. And this is because of, the big things going on. One, the government was shut down. Two, Trump and Xi were meeting. Three, Takachi was elected in Japan, and we had to see what she was going to do. And the thing in Argentina happened. Many, many things were going on, and people, the investment world kind of takes a step back and says, let's see what happens. We all have our beliefs, what's going to happen, but you're always like, I could be wrong, and this could be a game changer. I mean, if Trump and Xi had met or didn't meet or whatever you want to say, and then Trump kept the tariffs at that level, we'd be dealing with a much different market, right? So in other words, all that's kind of gone. And plus, in the Federal Reserve now, they've cut the rates and they're discussing the rates cuts now. Are they going to be, well, depends on who you listen to. It's 0, 25 basis points, 50 basis points, and one outlier in Moran who believes they should be 75 basis points. But of course, he has no credibility. So who cares? Okay. So is it going to be 0 or 25? That's where I think it's lying. I don't think 50 is in the cards. I think it's 0 to 25. And I'm going to lean and say it's going to be 0. Okay. Now, last time we talked about the hedge funds and their leverage in the Cayman Islands. And the Federal Reserve just put this out today. Okay. So here's the borrowings by the hedge funds. And so really, there's the two lines I look at here, the green and the blue. The green is prime brokerage and repo borrowing. What did we say that they do in the Cayman Islands? Repo, repo, repo. 56 times. So if you look, we started here in 2019, and this is when the hedge funds started to move into treasuries for the basis trade. We had the basis trade, but it was nothing before 2019. And then it accelerated in 2022. And look at the borrowings, it's all repo borrowing. Now, when you see this fixed income securities in the blue, to me, this is private equity and private credit, right? Because everything they do is leverage. And then the bottom down there is securities lending. That's margin. That's to like you and me, okay? That's where we do 50% of the value, not like the hedge funds in the Cayman Islands, which on average are 56 times leverage, all right? And we're already seeing what's going on with private credit. I've commented on private credit for over 2 years. I think it's a bad situation that's going to get a lot worse before it gets better. That doesn't matter now. It's going to work out one way or the other, and it's not going to be pretty. So it is what it is. So it's been a while since we've talked about this. So let's go over the numbers. I mean, the reason that I'm even paying attention to this is the yen hit 155 yesterday, and it definitely woke me up. Okay, so it was 151, then all of a sudden, boom, it was 155. And you can see this started to move up or down in value once everything kind of moved away. Everything is resolved for now on the geopolitical level. Okay, so Takachi is absolutely doing a program to boost the economy. Okay. And she said, don't hold back. And they're not going to raise the interest rates. And now Udida said he's looking at January, February. So that also would indicate that the yen will go down. So up in price, down in value. And so let's see how this works out, because one, what's going on is if they do this economic package, that means they have to issue more debt. And that means that they're going to sell down the yen, and they're not going to raise the interest rate. So that's going to sell down the yen. So also, over in Japan, they're struggling with their debt. So right now, it looks like for the time being, the yen's going to go down. Okay. Doesn't mean it's forever. I'm just saying for now, it looks like it's going to go down. The other thing that's going to work on the yen is the differential between the Japanese 30-year treasury and the 10-year of the United States, okay? But we're going to do both here. So the 30-year is basically 320. In the US is 4.7, we'll say. So there's a difference of 1.5%. So if, depending on how you did your trade, you could have bought the 10-year, you could have bought the 30-year, doesn't really matter. The differential is what matters. This is what people are making. So you have to think about it this way. You take your currency, you then buy the yen. Okay, once you're in the yen, you buy the JGB. Then you borrow the money out of the JGB. So that means you still own the bond. You just borrowed 100 cents of the bond out, and then you take that, you go overseas, and you buy whatever you want to buy. Doesn't matter, okay? So what's happening here is that because the spread is now narrowing and the yen goes down, so if you're holding this trade, you're losing money on the yen. And as the interest rates go up in Japan, which they are going, guess what? The bond prices go down. Remember, you bought the bonds and borrowed the money. So the bonds, you still own them, and they're now going to go down in price. They are going down in price. And you're in the yen, which is also going down in price. But you've taken the money and you put it over in America. And now, for the first time, we've already cut the interest rates. What are they going to do this time? Is it going to be 0, 25, or 50 basis points? Again, I'm leaning at there going to be no change, okay? But it could be 25, could be 50, or they could do what the outlier Moran, who has no credibility, wants 75 basis points. I mean, it's just, I think he goes out there and says that because there's absolutely no chance of it happening, okay? But this is what's going on. So here's a description you can stop and read on how the yen carry trade actually works, okay? And you have the charts, you can look at that. And here in the second paragraph, the first sentence, the yen carry trade influences the yen's value. When investors borrow yen and convert to a higher yield currency, the yen tends to depreciate, right? This is what we just said, right? You borrow the money, go overseas. And so when you go overseas, what do? Think about it. You own the JGB, you borrow the money. Where does the money come out? It comes out in yen. It doesn't come out in dollars. It comes out in yen. And so now you're saying, hey, I'm going to sell my yen and go buy the dollar so I can invest in America, so the yen goes down. Again, I encourage you to stop and read this, but let's go to the third paragraph. Profits from the carry trades depend not only on the interest rate spread, but also on the currency exchange rate movement, which we just talked about. If the borrowed currency, funding currency, strengthens, it increases the cost of repaying the loan in that currency. So think about it. If you borrowed in the yen and the yen goes up and you have to pay it back, it's going to cost you more money. All right. So if people perceive that the yen is going to go up, they're going to break the yen trade. All right. There's a lot of moving parts. Does the economic stimulus bill in Japan drive the economy, help it out? If it does, do they raise the interest rates? Their inflation rate is 3.7%. Their 25 basis points. What happens there? So in other words, we're watching one of the four major currencies and where the yen carry trade is and what's going to happen there. And of course, this will affect the basis trade. What do you think is going to happen? Like and follow.